So you have a friend who's also an entrepreneur. He's developed his own investment strategy, and I we talked about it a little bit offline. So I think it would be good to like I don't know
Yeah.
compare contrast what you
Yeah,
do, what he does.
I'm not sure if he does this for his personal investments, and I kind of wish he did because he's pretty high risk on his personal investments. I love him to death. He knows,
How
and
do you how do you
maybe
know what his personal investments are?
well, he shares them on Savvy Trader.
On
So
savvytrader.com.
no, this is not an ad, but um, but anyway, so he's helping his family members to sort of like invest in the stock market, and like he's pretty awesome guy. So he's created this
Yeah.
document that he shared with me on what he's sort of like sharing with his family members, which I thought was like super interesting. And like none of this is investment advice, but I thought like it would be worth sharing because he's actually thought about it and like put it concisely into a document. And some of the things that he sort of puts in as to great characteristics for investing over time is to consistently invest every single month, as preferably as part of your paycheck, right? Every single paycheck should have like a portion of your paycheck, if you can spare it, to go into some kind of an investment account. And then invest in high quality stocks that have a high probability of success, right? So those sound easy, but then he also defines what high quality stocks are and what high probability of success are. So I thought, it might be worth going over some of those things.
Mhm.
So in this document, he actually defines what are some high quality stocks. And he has it defined as these are stocks that have a good revenue growth rate. They are profitable. They have a strong competitive advantage relative to their, competition, obviously. They regularly introduce new or improved products. They have a high demand for their products, and they have a large and expanding market that they serve. So it's very easy to identify these companies looking backwards, in terms of what high quality stocks are. Like, so if you were to sort of look at companies that have met these characteristics in your life, in the products that you use, for example, it's very easy to identify like Google or Netflix or Apple or Amazon or, like all these companies. But the reality is that they're everywhere. They're like, we're constantly running across them. We sort of just either don't invest, or in a lot of people's cases, or we ignore the signs. Like we start becoming an Amazon user, and then, or Netflix, we start watching our shows on Netflix, and we forget the fact that, wait a second, if I'm starting to watch everything on Netflix, that means everybody else is probably starting to, or will soon if they aren't already. So
But
looking for those type of opportunities.
the other hard thing is the conflicting signals, right? So like for Netflix, there was a lot of fear from the market when they were going to do the password crackdown, where somehow that was
Right.
going to hurt them, which of course was not, because it would only force people to sign up and
Right.
the current user base would stay the same. But there was a lot of fear in the market, even though it's
Yeah.
objectively positive news. So that's another like thing where it's kind of hard sometimes to judge, is this a high quality stock?
Right, right. Well, it's harder to judge whether it's a high quality stock as opposed to whether it's a high quality company. I think like investing in high quality companies, even sort of putting the stock aside for a moment, is usually a good bet, just because in the long term, good quality companies will fit into their stock price, even if they're in the short term, their stock price might be overvalued, as Netflix has been multiple times in its history. But you're right. You just kind of don't know what the rumors that you're hearing, if they're accurate, or if they should worry you. Another thing that happened with Netflix is that everybody who introduced a streaming service, everyone was calling, "Oh, this is the death of Netflix," right?
Right.
Like Amazon Video went live, or Prime Video, and they were like, "Oh, well, you're going to get it for free with Amazon Prime. Why would you pay for another subscription?" Well, all I could see is that like I wasn't switching from Netflix because Prime sucked. They didn't have any shows on there. Why would I like choose Prime over Netflix? And therefore my own experience overrode this sort of like the rumors or the speculation that Amazon's going to put Netflix out of business, or you know, with people had heard those things with Apple and iPhone when Android started finally creating phones that were like decent, and it was starting to gain a lot of market
Yeah, the
share,
iPhone
especially.
killer.
Yeah, yeah. Same thing with like Tesla. Like every Tesla killer was coming out, you know, with EVs. So you know, there's always this sort of like personal experience that you have with the brand that I think puts you in a better position sometimes than even the analysts if you're using the product. So this is sort of super helpful. One of the other things he puts on there as a criteria is like look for companies with high probability of success, which rules out all the high risk investments because by definition they don't have a high probability of success. So no speculative stocks, no IPOs, no obscure cryptocurrencies. Sorry there, Dustin.
Don't whoa. Don't apologize. The key word is obscure. I'm invested in the highest quality cryptocurrencies, largest market cap. Nothing's obscure about them.
Okay, okay.
Okay, keep going. I'm not
As somebody
offended.
who
I'm just
has
upset.
Bitcoin, I'm like giving you shit for investing in
No,
other
I you
crypto.
know I love it. I
Yeah,
I think actually the no IPOs is an interesting one that a lot of people kind of fall into that trap, including
right,
myself, where like you just get so excited that X company is finally on the market. You don't know
right.
where the price is going to go, and you just want to kind of hop in before you're able to like see a history of the the
Revenues and
data behind the company. Right.
yeah.
Exactly.
And like I've watched the whole sort of IPO thing play out over and over again. Like Rivian is a perfect example of a company I love today. I did not love during IPO. When it IPO'd, it was I believe over $100 a share, and it even spiked to over 150, close to $200 a share. I don't remember exactly where it ended up, but I just remember doing the math. I'm like, for a company with hardly any revenue, at the time, the product, the R1T, the truck hadn't even been released yet, if I'm not mistaken. If it was in the like sales were in the hundreds of units. It wasn't like any kind of meaningful revenue from it. And the company was being valued at close to 200 billion, 150 to 200 billion dollars of market cap. Today, you can buy Rivian for 18 billion dollar market cap. So it's and it's 5 years later. They have way more. Maybe 4 years later, they have three different products. A fourth one ready to launch. They have like more than 60 different companies. Much different sort of uh, type of profile. But in Rivian's case, it's still not profitable. So, it might not even meet this definition of high probability of success because ideally you want to look for companies that are profitable. Um,
Yeah, I mean,
so
the second bullet in the high quality stock section is profitable. So I
is
don't think
profitable,
Rivian would
would qualify.
match
Yeah.
this. Yeah.
But I think this is great advice for general investing. Of course, in my case, I'm more of a higher risk investor, so
Right.
I
It's
love
for a
this
different
stuff.
risk tolerance.
Yeah, yeah,
The other thing with with holding off on buying an IPO that I think a lot of people miss is even if you don't buy when it IPOs and you wait a year or whatever to see how the company performs, and even if you're buying at a higher price, in theory, you're paying a fee for increased confidence in the
that's right.
company.
That's
So
right.
to me, it's still a good thing to wait in those scenarios.
That's right. That's right. Yeah, and like in market downturns, also newer companies who were high flying tend to get taken out or hit pretty hard, as like Amazon did in the .com bubble burst. Amazon stock went down 95% because it was one of the darlings of the .com era, and it was a poster child of a company that didn't make profits and was just hyper focused on growth. And
And they
you
just
know
sold
you could
books.
and they just sold books at the time, yeah. And in 2001, I think you could buy Amazon for far less than its IPO, but more importantly about 95% off from just a previous year's price, so peak price. So um, and then the other aspect of his investment document that he's put together is that have this sort of long-term 20-year time horizon. So when you're buying high quality companies that are profitable, that are growing with products that are in demand, and you have this long-term perspective, then the sort of short-term aspects of it don't matter as much, which is super helpful, right? Like if you had bought Amazon at the peak and ended up having this 20-year time horizon perspective, you would have still done incredibly well, right? Like you might have
Yep.
not done well for 8 years, but you would have done incredibly well after waiting long enough, rather.
It
So
also helps with weeks like this week and last week, right? Where like the market's going down. But like if you have a 20-year time horizon that you're looking at, why does this week and last week really matter on the grand scheme of
right,
things? I think it makes it easier to take a step back and look at the big picture.
right, right. Um, these type of things are just hard because they have a psychological effect on us.
Absolutely.
Like we make purchase decisions based on them, or we go on vacations based on whether or not, or we might buy a yacht, or just kidding. But